same city, Washington, D.C. That's where we were both born and both grew up there. So we have a little bit of Washington, D.C. and a little political bend to us as well. And I first attended the Real Deal's, I spoke at the Real Deal's first conference in 2007 at Lincoln Center. Was anybody there for that one? So that one, on the stage was Charlie Kushner, Barbara Corcoran, Larry Silverstein, and me, and there was somebody else, but I mean, those were titans. And what was interesting is that those were the titans, especially what Larry was doing in New York City at that time was amazing. He was rebuilding the World Trade Center, and an amazing developer. Charlie was doing exciting things, and Barbara was on her way to becoming a television personality. And so now here we are. The Real Deal has followed and covered the New York City real estate market, went to Florida, to Los Angeles, and so in fact, I think it follows me a little bit because our company builds buildings around the country. So we're on the East Coast from Boston, down to South Florida, of course, in Miami, and then in Los Angeles and San Francisco Bay Area. And I'm hoping to see a Real Deal in the Bay Area sometime soon. But now we're here for future cities, and now the next generation of developers. And Michael Stern definitely has built some of the tallest, if not the tallest, buildings in the city in terms of as a group. Innovative, an amazing story, by the way. I was talking to my publisher, John Wiley and Sons, about a lunch I had with Michael and how he should write a book about his amazing career. So you're going to hear a lot about that from him. So I'm here to kick off what Future Cities is, and so what a couple of trends are. And so I want to give you my perspective of where I see the trends in our industry in New York City, but across the country, and the markets that we're doing business in, what we see. And I think there are two things, and they're running parallel to what the national political agenda is today. So the first one is pretty straightforward, and I think we're all seeing it, and that's efficiency. So it's efficiency in how consumers utilize and consume real estate. So it starts from the discussion I had this morning with Sean Orchard about the mega mansions, like the one I own in Miami, Florida, that's 17,000 square feet. It's like a dinosaur. And that the new buyers today want efficiency. They want to have homes that are more reflective of a more efficient society, that are easier to maintain, that you can lock up and leave, and that are comfortable and more intimate. They don't want to have to do what I did the other day to try to find my daughter, my 16-year-old daughter, to call a cell phone, call her on her cell phone. So they want efficiency. So that now has gone into, of course, the apartment market in New York City. Sean and his company are marketing a building that Maclo is doing downtown that are micro-branded condos. So you're going to see residential units become smaller. You're going to see the buildings become more branded and more amenitized. And you're going to see single-family homes. You're seeing it in South Florida already. They're becoming more contemporary, more environmentally sensitive, and they are much more efficient. We're now looking at, if you look at the biggest example, and this year's been, 2018 was a big year for them, and that's WeWork. WeWork became the largest tenant in New York City. Imagine that. In a short period of about 5 years. And what they're selling is efficiency. It's a co-working environment for office space, and it has transformed the way businesses consume office space. Our company started as office building developers, so we understand office buildings pretty well. And co-working has changed how office space will be consumed going forward. Companies like WeWork and others have now created enterprise groups that deal with large companies like IBM and so forth, because companies don't want to be tied down to managing their real estate, and they don't want to be tied down to being locked in long term. So they are becoming much more efficient as well. And that is a big change, I think, in our commercial real estate industry today, is how we're going to consume space. And so going forward, there's going to be almost no market for tenants that are under 20,000 square feet to take 10-year leases in their space. That market is going to continue to shrink, and we're going to see office space more efficient. But let's talk about where we're going now with the political environment. So the political environment, of course, sustainability, efficiency. But there's another thing that's happening. Our society, New York City, for example, Miami, another example, and our country as a whole is a very diverse country, a very diverse community. And so the citizens are expecting equal access to equal opportunity. And that means, for example, if you look at our industry, less than 1% of the commercial real estate industry's executives are of color. Less than 2% are women. New York City, for example, and I'm a big proponent and a critic of our industry about this. New York City, for example, is a city of 8.5 million people. 53% of our citizens in New York City are female. 67% are minorities or people of color. And yet, if we look at the commercial real estate industry, you would think maybe we're in Provo, Utah, or someplace else, but not New York City. And so what is happening now, and is our communities and our societies no longer finding that acceptable. I think the national political discussion has accelerated that. I remember when I first started doing business in New York City, I met with a guy named Steve Spinola, who was then the executive director or president of the Real Estate Board of New York. And we were talking about what was going to happen in the New York City mayoral election. So that would have been around 2013. And he was asking me to serve on the Board of Governors, and we were talking about the political environment and who was running for mayor. And I predicted and told him that I thought that it would be de Blasio. And he didn't see it that way because he said that he believed in a certain way that politics were done. But what I pointed out to him was that the way of doing business in New York City was going to change. And either Rebbe needed to get on with being a part of that change, or it was going to be imposed upon them. So now, here we are, this year, they're showcasing diversity as a theme, for example. If you look at, I don't know how many people have seen Larry Fink's letter to a stockholder. Larry Fink, the chairperson of BlackRock. He talked about how BlackRock needs to change and how the industry needs to change in terms of inclusion. So the future of all major cities, because they're all diverse, because they attract diversity, and because there's an environment of opportunity, the future of every one of them will be inclusion. Excluding women and minorities from economic opportunities at the highest level is no longer acceptable and no longer possible. There are too many qualified women to lead in our industry. There are too many qualified people of color to lead in our industry. And so the number one change is going to take place there. It's interesting, Larry Fink did an interview on Fox a couple of days ago, and you should look at it, because he got criticized for it because he said no longer is black total employees. When you look around here in 5 years from now, this place is not going to be run by just white men. So there was blowback on that. And the criticism is his shareholders may not share that view. Well, let everybody in on a little secret. The big institutional buyers of his stock and everybody else's stock are public pension systems. California State Public Employees Pension System, New York State Public Employees Pension System, New York City, Florida. All of these major pension systems, they're almost the market makers for these stocks. They're the biggest investors in major real estate development, and they are managing money that belongs to women and people of color. And so they are now mandating diversity on the boards of companies that they invest and buy their stock in. California, I met with the treasurer, the newly elected treasurer of the state of California, an Asian woman, who is leading the charge of accountability in terms of how California invests its money. And so there's going to be a tremendous push now for inclusion from the investors in real estate, from the inclusion and for the buyers of stock. And so how does our industry meet this challenge? By being inclusive, by searching to create environments of opportunity, searching to find the most talented and brightest people capable to perform the duties, and giving people a fair opportunity. That is the future of this business. Those who embrace that are going to prosper. Those who don't are going to be archaic, and they're going to be dinosaurs. And it's going to be just like a building I took a look at the other day. It's an interesting story, and I'm going to close with this. So the premier building in New York City in the 1930s, the 1940s, and 50s was a building called the River House, okay, in Beekman. And it was the place, Henry Kissinger, who, former Secretary of State, so forth, he still lives here. This was the building, it was private, it was a co-op. You couldn't get admitted into that building, unless you were an upper crust person, right? So this was the premier building. So my wife and I went to look at the best apartment in the building last week. It's a penthouse, and it's 8,000 square feet. 8,000 square feet. Now, in Michael's building, that's going to cost, I don't know how much. I mean, $10,000 a foot. I guess that's $80 million. And then after that, we went over to look at a building that Sean sold in the penthouse over there in Walker Tower that was 5,000 square feet. So the River House apartment started off at $45 million. The co-op board turned down buyers all along the way, and the price kept dropping down. It's now $14 million. $14 million for what was $45 million, and what was the premier building. It had the interior motor car, doorman and staff all over the place, private club, was a tennis court inside, an indoor pool, a restaurant, and all that, and they're selling 8,000 square feet for $14 million, and will take less. Then you go down to Walker Tower, it's 5,000 square feet, and the apartment sold for $50 million. Because that's for the new generation, because they want inclusiveness. They don't want to be in a building that's insulated. They don't want to be in a building that discriminates. And so the companies that conduct themselves in an exclusionary way are going to end up like the River House. And the ones that become inclusive are going to end up like Walker Tower, which Michael happened to have built too. So end of the day, I want to leave you all with a thought here, and that is that inclusiveness is the future, and it's a part of change. Change doesn't come without proponents, it doesn't come without allies, and it doesn't come without confrontation. So that's why, by the way, I'm not the most liked person sometimes in my industry, because I call it out. But Martin Luther King said something. He says, in the end, we are not going to be judged by our opponents. We're going to not be angry at them. It will be the silence of our friends that's the most disappointing. So we cannot be silent while our fellow citizens and friends are denied equal access to opportunity. So future cities of America will be inclusive, and not just inclusive at the bottom and the middle, but at the top. So thank you. Good morning.